to that offer.
Right. Okay, great. Thanks,
All right,
guys.
Steve, thanks for the call. And you know, he's touching on, I guess, I would call it a strategy or a technique on buying multi-res stuff. And you know, that was it was a really good question. And you know, again, buying strategies, I could talk about that all day long. And I know that I've come across buildings. The reason why the building is so cheap is because the rents are so low, which we're getting into, which is the NOI.
And they could stay for 15 years, and you're not going to see a
And so your strategy is, hey, wait a second, imagine if I could double the rents. Well, then I'm going to double my NOI, and you're buying a deal. I think that is really the crux of the issue is to negotiate. What are you going to do with your tenants? Which is really what we're talking about. What do we do with our income? How do we adjust our income?
Well, I don't know that it's so much about adjusting it. I mean, the income, we can ask for proof of what it is. We can ask for rent rolls. We can ask for leases down the road. The really important thing is income in income-producing properties is usually pretty simple to understand. It's really deducting the expenses from it to get a proper NOI so that we can apply a proper cap rate to get a purchase
Now
price.
you were mentioning during the break that you wanted to sort of dig into a little bit more of the cap rate discussion.
Yeah, so what I was saying earlier was there's a real a quality to the cap rate. You're really buying the income, and you have to make sure that you understand how good that income is.
Yeah, I like what you just said there because I've never heard that before.
Okay.
You're buying the income, buying the income, and I tell you what, that is exactly what a commercial I guess investment is really about.
Absolutely.
Because you know, when we talk about seller in reality, this is what you have to tear apart. And obviously your income is based on all your expenses.
Sure.
And that's what you derive your NOI from. And in last week's show, we talked about cap rates. So let's get into a bit of you know, the reality of cap rates even.
Sure.
You know, I mean, people are saying, oh, it's a 10 cap. Oh, it's a 9 cap.
Right.
Well, what the heck does that mean?
Right.
Get into the numbers, right?
Well, I think that most viewers are probably going to know that anything in Toronto proper is going to command a very low cap rate, so a high purchase price.
That's right. And say that again because, you know, I'm not the brightest guy around, and it took me forever to say, wait a second. So a high price, low cap rate.
That's right.
A low price, high cap rate.
You know what? The viewers who called in and the two who are going to get these books are lucky because we spend quite a few pages explaining capitalization rates in our book.
Good. Well, let's dig into that some more because you know we're obviously we're here to help people invest and understand investing in York region and stuff. So let's get in a bit more on that.
Well, one of the questions that I get a lot of the time is what's the right cap rate?
Okay.
And I have to tell my clients or my students, I say, look, it's not a matter of a right cap rate. I've had people who live in Toronto say, okay, well, Yonge and Bloor at the corner, perfect property, what's it going to be? And I say, okay, well, retail with a few apartments above it, assuming average rents, average lease terms, etc., you're looking at a 4 to 5.5% cap rate. But I'm not going to say it's a 5.37 cap rate.
Yeah.
It's just not that precise.
Yeah.
Capitalization rates are, as you probably explained, just they're somewhat subjective, but they're a nice and quick way to analyze a property and its income.
Right. Okay. So we didn't mention that last week. A cap rate is the foundation of property analysis.
Of income producing property analysis.
Okay. Okay. So income. Okay. All right. So now, before we forget, I think time is flying on us once again. There's a million other things I want to talk about. Cap rates, we went over that, but I want to talk a little bit about your involvement as a teacher.
Sure.
Because, I mean, you've written some books. Talk to me a little bit about what's happening at U of T, because you teach at U of T.
That's right.
The fantastic, beautiful U of T.
Yeah.
Tell us a little about that.
We actually just finished one of our courses. It's an 8-week course, 3 hours every Wednesday evening. We finished it last week. The next one, we can only do so many at a time. The next one starts in January.
Okay.
And also in January, I'll be teaching new courses, a series of 3-hour workshops at York University.
Okay.
Based on residential real estate, but for homeowners and people interested in it. And I'm actually thinking that a lot of them will convert to the commercial course at U of T.
Are these courses, if I can, being a licensed guy, are these courses credit worthy? Are they just open to anyone?
They're definitely credit worthy, Mark.
Good point.
But the hoops you have to jump through these days, our industry is so regimented and regulated, as you know, being a realtor. It's not easy to get it done. And I've spent more time working with my clients than filing paperwork. It's something we're looking to get done, but not right now.
And so on these courses then, is there a fee, or how would they sign up?
Sure. you know what? We can actually link it to the cost of the book almost. You know, like you said, it's a $200 book.
Okay.
The course is commensurately priced. It's a $1,500 course for, I believe, 24 hours in class, 3 hours, 8 weeks. And the York course is interesting because it's making real estate knowledge accessible to many people. It'll be a series of 9 workshops. Each workshop is 3 hours long. You can pick and choose, and they're $99 a pop.
Oh, fantastic.
So you can come in, speak with me. I'll have home inspectors and mortgage brokers and maybe you as a guest speaker.
I'm there.
To come in and really just present knowledge in an accessible way.
And the York U one, which is more open to residential, that is just, you know, buying a regular home kind of thing? You're not really getting into the investing side?
Not so much. It's really just to demystify real estate to lay people. You know, one of the segments we look at when you're making an offer, I even tell them how to buy a property without a realtor, if that's what, at the end of the course, they really want to do. Which many might not. But we have one segment that talks about the importance of a home inspection. Is it really important or not? And we're going to look at that.
Claude, thank you so much for the show.
having
We touched on so many topics, we could go on and on. My guest has been Claude Boiron, an excellent book, Commercial Real Estate. We're going to see you next week on Your Money in Real Estate. Take care. Thanks. Bye-bye.